So, how the fuck are you guys doing today? Today was a pretty interesting day, interesting week, so to say, right? I caught a lot of this, right? I caught a lot of this, but what's crazy about this and what's like about this is that in one of these, so I caught this one up here, but my stop loss ended up getting hit and I couldn't reverse my position, couldn't do it because of mad bullshit. My fucking internet was fucked. I couldn't sign on to my trade evade. So much shit happened. I was able to pull out, but then I came back. We made a fucking couple good runs, but honestly, fuck. It was honestly just fucked. But let's get into what today is, right? So yesterday we learned what's the elements to trade setup is. So like what stages of market should be in, right? What you should know, what you should look for, and all of that, right? You guys should be better at this because like I said, what you guys should be doing after every single lesson is back testing these things, right? Is going on the charts yourself and finding out, does this shit really work? Yes, it does, right? Let me show you guys that it does, right? Let me show you guys that it fucking works, right? So boom. Today, we're going to go over something that's very, 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 very important, right? So what makes these things move? What we know that supply and demand, people buying in and having the most amount of money is what buys and moves the price up and down, right? So it's not only that, right? Because you got to understand price is like a magnet. If price is like a magnet, what is it a magnet to, right? You say price is a magnet. If it's a magnet, it's a magnet to something called liquidity, right? That's what we're going over today. If you guys don't know what liquidity is, we'll go over that right now, right? A magnet equals liquidity. What is it a magnet to? It's a magnet to liquidity, right? That's why, and where does liquidity lie, right? Liquidity lies in prominent highs and prominent lows, right? What's a prominent high? That's a prominent high. That's a prominent low. That's a prominent low, prominent low, prominent low, right? Prominent high, prominent high, prominent high, prominent high. It's basically the tip. That's where liquidity lies, right? Or the bottom. That's where liquidity lies, right? Why? Why does it lie here, right? Why you may ask, right? It's because what's liquidity in the first place? Liquidity is orders, resting orders, right? What does that mean? Orders that have not been filled, right? So if we see here, right, as we see it going up, there's a lot of people that saw this and just said, you know what, we should go down. Let's put the stop loss right above here and let's target this old liquidity over here because it could potentially go there, right? What did it? We went close. We could potentially go to tomorrow, right? But this is why you guys should see where price wants to target, right? So I have this down. It's a prominent price point. We'll go over that later, right? We'll go over that later. So unless they could do this, like I said, and then they go here and then that's the trade. What does price eventually want to go do? Price eventually wants to go back up and take them out because they're targeting down here. Usually people are going to target really fucking far away and they're not going to take profits because they want to hold it like dumbasses. To be honest, you should always take profits at a certain point, especially at 2-to-1. When it's 2-to-1, always take profits. Or when it's 1-to-1, take profits depending on the volatility, right? Now look. What happened? Price went down, dipped above here. He didn't sell because he walked away, went to the gym, did whatever the fuck he needed to do. What happens? Price goes back up, immediately wicks under it. Look, you can see what is a wick? We know that where price went but didn't close, right? Look, price hit that exactly and then went, no. Why did that? Why is that? It's because usually people put it a couple pips above the stop loss, right? So be like, okay, yeah, hell yeah, this is like, I'm gonna put it like a tick above the stop loss. And they'll do that. And what happens? Boom, it makes sure it takes all the liquidity. Think of it as a rubber band, right? If it's like a rubber band and it's like, what happens when you let that go? It's gonna, right? It's gonna fucking, right? If you fucking grab the rubber band and you go like this with it, and then you shoot the fucking pen, right? What is it gonna do? It's gonna shoot the fucking pen. And I'm pretty sure we've all done that as kids, right? Think about it like that. Think about it as liquidity as like a rubber band, right? A rubber band lies above this high, right here. A rubber band lies above this high, and what happens? We get back and stretch down to the downside. You're always gonna see some speed involved in that, right? That's why we've seen a lot of volatility come in right here. This is a strategy tester. I need to turn this fucking shit off, but like I said, what happens? Price was up here. Why? Because a new pool of liquidity was formed. And where is the pool of liquidity? Above a prominent high, or above a prominent low, or below a prominent low, right? So if it's like a rubber band, why did we come up here with speed and go, and we went back, make sure we got all of them, hit the stop losses, and then we went bow into the opposite direction, right? That's what a liquidity sweep is, right? That's what's known as a liquidity sweep. We go to target liquidity. The orders itself is liquidity, right? Liquidity is like a rubber band. And when price hits the liquidity, something called a liquidity sweep happens, right? It's like a rubber band. It gathers up. So price is going, developing, going up to it. It gathers up all the liquidity and then like stretches it back and bow, right? And now where does liquidity lie? Above here. And it's shooting down for another opposite pool of liquidity. Whether that could be below on equal highs right here, right? Because these have equal highs. You want to find equal highs, not just a fucking high or not just a prominent high, right? You want to find lows or highs like this, right? What's an equal high? Notice these two candles right here. They're in line, exactly close at $5,572.25, right? It closes that. You want to target the close of the equal high, right? Equal high or equal low, whatever it is. But it has to be equal. The close right here, right? We know that it closes. This is an equal high, equal low. Liquidity can lie here. Liquidity can lie here too, right? Maybe here a little bit, but you want to be targeting these equal lows. Liquidity, right? Liquidity, what happens? Price went up and took this down, boom. Drops in there, making this one. Now it's shooting for another opposite liquidity pool. What could that be? Right here, right? You got to understand, we're not seeing this develop like this, right? We're seeing this, and now it's like, okay, yeah, you know what? This is a cool pool of liquidity right here. Oh, okay, hey, this is a pool of liquidity right here. I want to see a retracement back up here. What does it do? Price goes and drags up there and does it. Now, where's it most likely to go, right? Probably here, right? Most likely, or probably even here, because this is an equal low, right? But it's not prominent, right? So it's most likely targeting here. It's not going to finish going down until it reaches the point of liquidity that it wants to reach. You got to understand that. Because if price is like a magnet, think about what the fuck a magnet does, right? If a magnet is close to something, what is it gonna do? It's gonna attract it, right? If a magnet's even far away from something, but it's close to another magnet, right? Go get a magnet if you don't think you think I'm like just yapping, bruh. Get a magnet and see. Get a stronger magnet and then put it in the middle and see what it goes to. You think it's gonna go to the smaller point of liquidity, or the smaller magnet, or the bigger magnet that's gonna attract the fucking price? So it can take out this because even though it wants to go to the smaller pool, it's getting attracted by this. It's getting attracted by this huge pool of liquidity. What could that be, right? What could that be, you ask? It wants to keep going down. For example, it could want to keep going down to get more points of liquidity from down here, from back fucking then, right? We could go 15 minutes from where? Where's the point of liquidity that it wants to target, right? It could target all of these right here, this sell side liquidity right here. It could target this sell side liquidity right here. It could target all these equal highs right here, which is liquidity, and liquidity right here, right? So bow right there with sell side liquidity. So that's probably the best form, right? You got to understand that resting orders are stop losses or take profits, right? But mostly stop losses, because the price, you got to think about of the market as like a fucking beast, bro. That just, you don't predict it, bro. And if you try to predict it, you're gonna get fucked. You want to find your entries based on what it's giving you. You understand that? And if you don't have a good win rate, then you're not targeting what price was targeting. Then you gotta find out what price was targeting, go back, because like I said, you're not seeing price develop in front of you. You're seeing price develop after, right? That's what we'd see. We see price develop after, right? And so what happened, right? After we took out these, after we took out this liquidity right here, what happened, right? Now we have a new sort of point of liquidity. We also have this, which we wicked above right here. So that means we're about to go on a downside. So where could we be targeting? We could be targeting down here or even down here, right? Like I said, the most likely case is that we're targeting here or even here, right? Let's see. Like I said. And now we're probably going to consolidate for the rest of the fucking day because we're out of kill zone, right? But what happened? What do? We went and took out this fucking liquidity. What happened? It took out liquidity up here, right? So it took out the fucking people that were going long, short right here. Because like I said, you can make money off it going down and going up, right? So if there's a bunch of people going short right here, right? You got to understand, if there's a lot of people going short, the chances of it going down all the way to the point of liquidity is very low now, because now it senses the bigger liquidity. Now we're in the middle of both of them. Like I said, now which point of liquidity is stronger? Which magnet is stronger? This one or this one down here, right? A lot of liquidity just got spawned in from this one, right? Because we went up, we were already on a downtrend, so people thought we were gonna shoot for the fucking gutters again, right? And so what's the most likely case to happen is that we're gonna go, especially when you see retracement like this. What is retracement? Slow price action going up. It's very, very like pressured down, right? It's very pressured down. You're gonna see that. It's very pressured down and very, okay, yeah, it wants to go down, but wants to go up because it's being forced to go up. You understand that? You can see it wants to go down. You'll see willingness in it wanting to go down, but you're not gonna see it go down because it's being forced to go up. To what? To this point of liquidity. If liquidity lies above here, if liquidity lies above equal highs and prominent equal highs, then it's gonna wanna go back up and get this, especially if it was a lot of liquidity, right? It wants to go take it out, and look what happened. Dropped fast as fuck after and went on a downtrend. And then now what happened? Again, went to go take out some fucking liquidity. Now we're outside of a fucking kill zone. So what are we doing? Going down, up, accumulating orders. Consolidation, right? We reversed. Now what happens after we go to reversal? We're on an uptrend. What happens reversal? Consolidation, right? For what? And then what happens after consolidation? Expansion, right? If expansion happens after consolidation, right? Then that means we're consolidating right now to build up orders to go where? Depending on where quantitative data tells us to go. You understand? And our daily bias tells us to go. This is how it works. We're starting to get into the meat and bones here, right? I'm gonna have a whole separate part of this for psychology, because I could teach you guys everything that you need to know, right? But doesn't mean that you'll become successful. Fucking like 60% of this, 80% of this is controlling yourself, is learning how to sit on your fucking hands and not do anything and watch. So not chase price because you think it's going down, right? Or you think it's going up. So fucking I'm trying to catch the top of this and the bottom of this and the top of this. Bruh, why are you trying to do that? Find one entry, be okay with that entry, be okay with that setup, be okay with the amount of money that you made, and you're gonna be fine. Use proper risk management, which I will teach you how to use. Proper risk management. This will come into the strategy portion of this, right? Of Day Trade with Vibes. It's gonna come in the strategy portion because this is what makes you profitable. I'm giving you everything that you need to know to be able to be profitable, right? To make what your dream is happen. Because the only way that'll happen is through your fucking shit. It's through the shit that you do on a day-to-day basis, right? I can give everything to you, but doesn't mean that you'll fucking do it, right? You have to apply these things. Just watching the video or doing these things isn't enough, right? Just watching the video, taking notes, these things aren't enough. You gotta have market experience. Go live, like I said, on market, live. Go paper trading, do live, do whatever the fuck you need to do, but do it live so you can get real market experience, right? And do that. Liquidity lies at these points, like I said. And the same thing as if, right, a bunch of people were going short here, here. The same thing as a lot of people thought this was going long, right? So they were shooting for the fucking, they were shooting up here first. Great trade. They could set their stop loss right above this, right below this, this point of liquidity right here, because if it goes to get it, then it's gonna fucking keep dropping, right? And then what happens? We go, we move, and we keep fucking pushing it up. What happens? This is a great trade, by the way. Fucking amazing. But look at this. We go up, 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 drag it, right? Now we're, as soon as price hit this point of liquidity, what happened? Like I said, reversal, fast to the downside. And then what happened? It sensed the point of liquidity right here. There's no news. There's nothing that happened special. It sensed the point of liquidity, stopped right at this fair value gap, right? Who knows if it's a fair value gap on the higher time frame, right? Most likely. Yeah. So what did it do? Dropped, target this imbalance, went in, filled the orders, retraced back up, and now we're consolidating. To do what? Most likely come back here and take out everybody that was going long up here because they didn't fucking take profits. Depending on if they took profits, right? Liquidity can let go, right, of a certain point. There's always going to be liquidity, but you got to understand, if stronger points of liquidity happen, then there's no point on it, the price going down here, because people let off right here. If a lot of people let go of their trade right here, then there's not that much liquidity here anymore, is there? Right? So what happens? Boom, we drop up, take out everybody up here. Because this is the stronger point of liquidity. Why? Because this just happened. And there was probably a lot of people that caught this. Why? Because of all of this that happened, right? We're seeing all of this happen. And bias is going down. So a lot of people thought we were fucking probably going to the gutters. Probably going even farther. This was a higher high on the higher time frame. A lower high on the higher time frame. We know the fucking, the trends, they work like this, right? They work on higher highs and higher lows, right? If they work like this, people thought it was one of these. and it were targeting down here. But what it was is that you made your entry right here, and then price wanted to go take that out, right? That's what price wanted to go do. Price wanted to go retrace slowly and take you out based on your stop loss, right? And then what happens to you? You lose your fucking money. And what happens to price? It starts fucking going down, right? And it starts accumulating to do what? Probably head in the direction that it wants to go towards a new point of liquidity. Possibly up here, right? Or probably down here, depending on which point of liquidity is stronger, right? And our daily bias. If we see our daily bias, right, we're gonna most likely see, and we'll go, I don't think I went over daily bias. I'll go over it again in another video. But like I said, it's just pretty much where you wanna go for the day. I'll teach you how to find that. It's pretty much where just seeing where you wanna go for the day. So, okay, we're bullish today. Oh, we're bearish today. You understand? Because if we're bullish or bearish today, then it's different, right? Or if we're bearish, then we're gonna see more extensions to the downside than we are rises to the upside, right? What do you see more of? We had a bearish day today. You see more red than green, right? Look at these extensions down. Overall, look at this trend right here. Overall, we're going down, right? But we had a tiny extension up, big extension down. Tiny extension up, big extension down. Tiny extension up, big extension down, right? You could see these things. Tiny extension up, big extension down. Higher highs and higher lows, right? If the price moves in higher highs and higher lows and then moves to lower lows and lower highs, right? If we're having a bearish trend or we're bearish for the day or bullish for the day, then that means we're going to see more extensions to the downside. So if we have a bearish day tomorrow, what's most likely going to happen is this liquidity is going to get targeted right here. And then this one, probably both of these, right? And then we'll probably make our uprise. If we target these in the middle of the night, then we'll have a bullish bias, right? Why? Because if it's like a spring, if it's like a rubber band, we hit this rubber band, now we hit this rubber band, what is it gonna do to price? Spring it in the opposite direction, right? Especially if it happened overnight. If you're seeing anything before market open, think of the opposite, right? So if it's going down or going up like crazy in the middle of the night, futures, and you just woke up, it's fucking running like crazy. Think the opposite, because right now, that's what's gonna happen when market opens. When all the volume comes in, they're gonna take it down to the downside. The liquidity is gonna, the liquidity will get targeted within 7 o'clock to fucking 10 a.m. kill zone. The liquidity will get targeted and you will see a fucking reversal. You will see a reversal based on whatever the fuck it is. And then what are you gonna see? You're gonna drop it and you're gonna take it wherever the fuck you wanna take it. Target prominent highs and prominent lows, right? Target building blocks. We'll go over that, right? We'll go over take profits too. This is everything that you need in order to fucking learn this thing, right? Everything in order, right? And I bet if you've watched all of this up until now, it's starting to make a lot of sense. It should be starting to make sense. At least more than a lot of the fucking people that you see online. You should have some idea about what's happening here, right? You know who moves the market. You know how the candles move up and down, right? You know which candles are important. You know how the market moves. You know how value works. You know how fucking what futures are, what Forex is, what crypto is, how the crypto supply works. I taught you all of this. And if you can't watch it, then you deserve to fucking fail, bro. Because I'm giving you fucking free years worth of experience for free, bro. Like I said, and if you don't watch it, then you don't deserve to be fucking rich. You don't deserve anything. You don't deserve the finer things in life because you don't want to work for it. Have fun being fucking broke. Have fun with your kids asking you for shit to struggle. I could never, ever let my kids struggle the way I fucking did. Hell no. You understand that? And for that, I have to put in the hard work, and I did it. And I'm giving it to you guys for free because people charge you for this shit. millions, thousands. You understand that? For this shit, where you can genuinely take it and use it. This is all the information that you need in order. Like, you will understand these concepts after. If you didn't, then you just gotta watch it again. I'm being so serious. Because nobody will explain it better. Nobody. I'm being serious. Because this is what happens in the market now. I sat here for fucking days, writing the fucking plan, doing what the fuck you guys need to learn in order so you guys can be profitable, learning the right information and how to actually use these concepts. A lot of people fucking don't use these concepts right? Which is fucking crazy. Which is wild to me. But like I said, that's what it is. This is liquidity. Liquidity lies at prominent highs and prominent lows. So if it's like a rubber band right here, right? It's like, what is it gonna do? Fucking drop it down, bruh. Because it's like a rubber band. And if it fucking didn't take that, then it's probably tagging up this liquidity pool right here. Whatever it is, whatever liquidity pool it stops at, you gotta understand, all the rubber bands that it's pushing back has to come back, right? You're gonna see it again. It depends, and you're gonna see how fast. That's why this drop happened so fucking drastic, right? This huge drop drastic happened, right? Why? Because look at how many fucking pools of liquidity we pushed through, right? Just to get up here. Probably 1, 2, 3. Look at this shit, but drop, up, and what happened? Like I said, we pushed through all these pools of liquidity. What happened? Bam! Fucking gutter shit, right? Which was bound to happen if we're going up fucking forever. We can't go up forever. Why? Because it's higher highs and higher lows. Liquidity has to be found, taken, and then pushed in the opposite direction. That's why. Price is like a fucking monster, always fucking trying to find new money, right? Look, the second it went down, goes back up. I want these motherfuckers. Took them out. Second they drop, I want these motherfuckers. Okay, actually, I want these motherfuckers that came out here, right? Boom, what happens? Fills into the fair value gap on the fucking thing. Didn't even fill the fair value gap. Just filled in the orders. Boom, hit there exactly, pointed in exactly. You can't tell me that this doesn't work. You can't tell me that it's not a fucking algorithm, that this shit doesn't work. Because look at what the fuck happened. It immediately taps in. What happens? Taps into the middle. What happens? And it's in fair value, 100%, right? In fair value. Seeing that. Fair value, in a fair value gap, above the fucking breaker structure, to the upside. What happens? Taps into it, drops back up, takes out all the liquidity up here, resting above these fucking heights. Easy fucking money, bro. Easy fucking money. With futures, bro, you're getting like $5 per like 25 cents per contract, right? The S&P 500 moved for like damn near $200-300 today, right? Just in the past 2 days, the S&P 500 has dropped fucking significantly. Has dropped a whole fucking $200, bro. You understand that? Dropped almost a whole $200. And so think about that fucking, that's for NASDAQ, right? Think about it, it's like $50 for fucking 50 cents, right? Per fucking 25 cents. Or fucking $20 per 55, or $20 per fucking, for S&P, right? But you'll see it. Like I said, you can see it fully. A lot of money, bruh. Look, I'll do it again. Boom, right here. Say if we fucking had one contract, right? Just one contract, which is usually fucking people do 10, fucking 20. Me just doing one contract, and I go sell right there, and I go boom. That's fucking $3,000, bro. What happens? Boom. What does it do? Drops. How much money is that? That's $4,000, $3,500. in a day's worth of work. Literally. This is one day. This is one day's price action. You could catch some shit like this. Why? Seeing the liquidity sweep, seeing liquidity got swept, seeing a bunch of shit, having your confluences, seeing the break of structure. Boom, what happens? 3 fucking K off one contract. Imagine if you have 5 or 10, times that by 5, times 10. That's how it works. It's a lot of money to be made. But you got to understand that if you're thinking like that, then there's going to be 1,000 other people that's thinking like that. And if there's going to be 1,000 other people that's thinking like that, then chances are that it's going to go for your stop loss. So don't have a long fucking try or a long return. You don't want a 30 RR return or 11 or 5 or 6. You need 2 to 1. 2 to 1. Because if you lose 6 in a row, bro, 6 in a row, out of 10 trades, you lose 6 in a row, but you only risk 1%. 2 to 1. You only lose 1%. All right, ready? So 6 losses in a row. You lose 1%, 2%, 3%, 4%, 5%, 6%, right? You lose 6%. 2 to 1. So when you win 4, right? You say out of 10 fucking losses, out of 10 trades, you lose 6 and you fucking gain 4, right? 2 to 1. 2, 4, 6, 8. We're profiting 2 now, right? Because we fucking lost 6, now we're profiting 2, right? That's how it works. You know, 2% is, what about 2% of $1,000? That's all I have. Go on a prop firm. Go on some shit like this, right? Go to fucking Apex, right? They have fucking 80% off all the fucking time. Go on some shit like this. When you're profitable, when you're done with this shit, when you have 2-3 months of profitability on demo, no real live money, playing with $50,000. And then look, all you need to do is make 3,000, not lose 2,500 while making that 3,000, and then you're fucking good. And you get capital to $50,000. You get access to $50,000. And when you make the profit, they'll fucking think the same rules apply. You can't go under 2,500, but you don't have a certain profit goal that you have to reach. You can reach it in any fucking time. You can make as much money as you want from however you want, and they allow you to get up to 20 fucking accounts, and they have all the way up to $300 fucking $1,000 in funding. Obviously, the profit goals are higher, right? But that's why I recommend you going for a bunch, like 20. They allow you to have 20 accounts. That's why I recommend you go for 20, 50K accounts, right? If you're going for 20, 50K accounts, that's $1 million in funding. Amazing, right? And what's 2% of $1 million, bro? $20,000, bro. You have a capital problem, not a returns problem. You understand that? Most of you guys are making great returns, but you can't fucking stomach anything. You get out of this bullshit. So, that's what I'm saying. You guys have to be smarter with it. This is risk management. We'll go much more into further detail during our risk management section, right? But this is why I'm gonna have to teach you about this, because stop losses are orders, limit orders, right? Limit orders, or just stop losses or limit orders, right? What's a limit order? If I go to paper trading right here, right? If I go to paper trading right here and I go, boom, I go, you know what? I want a limit order at here. What is it gonna do? Now it fills it in, right? Or limit order. I want a limit order at, say, 62 altogether. And I'll put 5 contracts. You understand? So now, why do we use limit orders, right? Is because when price is moving really fast like this, we want to, say, place our orders right at here, or like place our limit orders at a place where it's like, okay, yeah, you know what? I'm gonna place my order right here, so that way when price comes here and gathers liquidity, it's gonna be very fast and I can get a great entry doing that. It's risky as fuck, but you can get great entries doing that. Buy limits, right? Because then if you know where the height is, you know where liquidity lies, you know that it's not gonna be that high, right? It's like me saying, okay, yeah, you know what? I'm gonna push this up right here. I'm gonna push this order up right here. right? I'm gonna push this sell right up here. Hold up. This is paper trading, so it does not matter like at all. 607. So it's like, okay, the second it hits the 79% discount, it's probably gonna wick under and go really fast, right? So what is it doing? It's arresting order. So it's like, okay, yeah, you know what? I'm a target right above these highs right here. So like we'll just do that. What's that? Boom. Price would go in, tap into it, fill the order, sell limit. So what happens? Price needs to get to 5,607 for me to sell, or 5,600, yeah, and $5,605.25 for me to be able to actually fucking go do it, right? For me to be actually able to fucking put in the order, right? Or the brokerage do it for me, right? Boom, we click in the orders because it'll do it. When price hits it, it automatically does it for us, right? So say I can walk away right now. I could put my stop loss, boom, put another one right there. I could put a take profit. What happened? I could put a take profit down here. Okay, yeah, you know what? And then if price goes above this premium, okay, I'll target these right here. If price breaks above this premium, we're most likely gonna go up. So I'm gonna just leave it like that. When price comes above here, what is it gonna do? Put in the trade, add another 5 contracts to my order, right? That's what it's gonna do. It's gonna add another 5 contracts to my order, right? That's what I mean. And then it's gonna fucking, if liquidity, if I'm not the only person that did that, and liquidity lies above here, it's gonna wick above it, and it's gonna fucking start its descent down with the time delivery. Time is the most important thing, and I keep saying it. We're gonna go over it, and I'm giving it its whole section. Its whole section, because you guys have to understand the time aspect of it, right? How do you determine what fakes you out and what doesn't? It's the time of it. You're gonna see the most prominent moves at certain times, right? And they're the times that fucking happen, right? Look, what is this? 1550, 1555. Oh my God, we broke structures to the upside on the fucking hour, on the dot. In the last 15 minutes of the fucking thing, I tell you guys this shit. You guys aren't hearing me. Like I said, boom, it's sell limit, right? The same thing goes the opposite way, right? If I was trying to go, right, let's take all this out, right? If I was going down here and I wanted to go a buy order, right? Whatever the fuck it is, right? Or hold on. So I wanted to go to buy order and I wanted it down here. Or from right here. Price is gonna go down. Target this liquidity right here. Potentially come in to fill the rest of this imbalance. Target this liquidity and fill the rest of this imbalance here, right? So what's gonna happen most likely is that price, once it hits this price point right here, exactly hits this price point, then price is gonna wick above it, wick under it. It's gonna take it like right under, probably just right here, and then start its uptrend because it's like a rubber band. It hit this point. Now my orders are filled, right? So think about it like that. So if I was to go like this, and I was to go say, right, say 576. What is it? 576. Stop loss, right? We put our stop loss 1%. Boom. It's not gonna fucking do it right now because the fucking, I hate bar replay so much, bro. But that's what it is. Like, that's what it is. It'll fucking do that. Hold on, let me just fucking skip to the bottom. Fucking hello. Okay, so like I said, what is it gonna do? It's gonna go that I put my stop loss here and my buy limit here. right? Now I have my limits here. And I have my stop loss right here. So what happens when price touches this price point, this line is gonna turn into this. Into something like this, right? You're gonna see the numbers and you're gonna see now, that means your position is in the fucking contract, right? That means you've opened your position, right? That's what that means, is when it goes down, you opened your position just now, right? That's what that means. And when it fucking goes up, you'll make money. Or when it goes down, you'll make fucking money, wherever the fucking way you fucking decided to go, right? Like I said, liquidity lies at these prominent highs right here. If liquidity lies at these highs, because of what? Or prominent highs and prominent lows. Because people are going short and other people are going long. So if they're going long, then there needs to be orders to be filled. All of this is called liquidity, right? And the process of price grabbing liquidity and changing directions is called a liquidity sweep, right? It goes up, gathered the liquidity, swept it in the opposite direction. Now we're going to sweep it in the opposite direction, right? Just like what happened here. What happened? We grabbed liquidity. All of this is liquidity. What price had fucking thing, had support, but didn't close there. Had support, didn't close there. 3 times. What happens? Dragged it up and shot it in the opposite direction. After we were going to uptrend, gathered liquidity, shot it in the opposite direction. That's what people thought were going to happen here. We gathered up liquidity and shot it up in the opposite direction. We did, and it could have been a decent trade if we were targeting fucking these lows, or if we were targeting these fucking this sell side liquidity or this sell side liquidity right here, right? Or even this sell side liquidity right here, which would have been better. Or like I said, target your building blocks, your fucking fair value gap right here. Boom. You target that. That's your fucking take profit. You take profit. When you see it start going to break even, let one contract run always, and then fucking when it goes to break even, it stops you out, right? Like I said, that's how that works. So if I wanted to do that, right? Like I said, that's how that works. That's what I'm trying to tell you guys. You understand that? That's what liquidity is. Liquidity is what moves the market in terms of like, okay, yeah, you know what price is attracted to. This is money that's just sitting there. So what do they want to do? Price wants to go take that money because it's just sitting there. Well, who would just leave money sitting there? Think about that. It's just money that's sitting there, right? It's money that's sitting there. And when it goes back up, it's going to grab that money and use that money to push price or push the candlesticks and where the trend wants to go in whatever direction it wants to push it in, right? Whether it's down or whether it's up. But we know if it's up, it's going to be higher highs and higher lows. If it's down, it's going to be lower lows and lower highs, right? Like that. That's what we see. Right now, we're in a stage of accumulation. What could happen? Very easily come up, grab this, start a fucking uprise, right? That could happen tomorrow. This could very, 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 very likely happen tomorrow, right? Extremely likely. Very, very likely, matter of fact, because it's the fucking S&P 500. This shit is constantly going up, right? And you'll see it start to fucking follow it. It's going to take this liquidity down here, potentially take this liquidity down here as well, since it's already at it, and then fucking keep it moving in the direction it wants to go in. Why doesn't it want to keep going down? Because it's done taking liquidity. Now it senses liquidity all the way back up here from all the people that went short, from all the people that didn't sell. And now what price wants to go do? Take that out or stop them out or take away their money before they can sell it, right? This market is made to beat you. This is what I'm telling you. If you don't watch these fucking videos, you're gonna fail Because this market is literally made, designed by order to beat you, bruh. It's designed by order to beat you. It's designed by order to fucking take your money away from you, bruh. It's designed by order to go for the nearest stop loss, right? For the nearest stop loss, or the one with the biggest fucking liquidity, the biggest magnet. Think of magnet, liquidity. It's the same shit, right? It's what it's attracted to. Price is what, the liquidity is the magnet, right? And price is what it's fucking magnetizing, right? So there's a fucking huge ass fucking magnet right here. You could think of that as a pool of liquidity. If you want to think about it as a rubber band or as a pool, whatever the fuck you want to do, what happens when you fucking jump into a pool, right? You're gonna fucking sink and then fucking stay at the bottom? No. You're gonna fucking jump in. Once you jump in, once you start losing momentum, which is what happens here. What happened? We went in, we had a fucking huge pool of liquidity. What happened? We go, fall into the pool of liquidity, and then fucking spring back out. Or like I said, think about it as a rubber band. What happened? We hit the rubber band, sprung it in the opposite direction. Literally within fucking minutes. Sprung it in the opposite direction within minutes. Think about it like that, right? That's the fucking shit. And it goes to an opposite pool of liquidity, right? And then what happens? Boom! Drops into this pool of liquidity, right? And now what happens? Drops back up. It's constantly trying to find liquidity, right? This should be the basis of everything you fucking do in your trade. Every strategy you use, this should be the basis of where it's going. Where's price going? This is the basis of your qualitative data, right? We have quantitative data that tells us what? Tell me, right? It fucking tells you where price is going. Factual data. What's quantitative? It tells you factual data. What's qualitative? It's your opinion, right? Now, say if I say, with the quantitative data and my daily bias telling us, hey, we're going down. With that, I find a pool of liquidity that it could be targeting, right? It could be targeting here or here, right? If it goes past here, I'm gonna sell like 50, 60% of my position, keep moving until I hit some more profits, and then probably take some there, and then just let it rock until I hit my take profit too, right? But I gotta make my entry using my building blocks, right? The right way. Like I said, this should be the basis of your qualitative data. Your qualitative data is where where the price wants to reach, right? Price wants to reach right here, right? I think price could want to go here. Let me look at my fucking qualitative data to see my quantitative data. Right now, I can see my quantitative data. It says 45, 45. Everything's looking negative, right? Regardless, now we're in a fucking consolidation zone, and it says that, right? We're in consolidation. Now, what happens, right? We're gathering orders up to both sides to do what? Potentially, like fucking quantitative data is telling us, to fucking go down, take this liquidity right here, and eventually keep moving up, right? Or keep going down and then do whatever the fuck qualitative data says from there. Quantitative data says from there, right? Not qualitative, quantitative. Quantitative is factual, right? But after this trade, you shouldn't even be trading, to be honest, because you're done for the day. You putting yourself back into the market is another risk you have to take, right? And you have to understand that the money you just made, you can lose that too. You just made $1,000 and you can lose that $1,000 just because you fucking decided to take another trade, right? And you decided to switch your bias, switch your analysis, switch the shit that you're doing on a day-to-day basis, switch the shit, right? Because you think that price is gonna go up or whatever the fuck and keep going up and you're gonna make so much money and you're the fucking best day trader in the fucking world. until you lose the fucking money, and then you're fucking wondering why you're even day trading in the first place. It's a fucking fact, bro. Stop doing that shit, right? I'm teaching you what the fuck you need to teach. If you don't watch these things, you don't want it. Have fun at fucking In-N-Out. Welcome to In-N-Out. How may I help you? Have fucking fun at Walmart. Wally World. Fucking chilling. Have fun. That's what I'm telling you. I used to do these shits, right? I didn't work out In-N-Out or Walmart. I used to work at Walmart at fucking back when I was like fucking 17. After fucking like fucking nighttime as a stalker and shit. But bro, this is what I'm saying. Have fun, bro. If that's what you want with the rest of your life, not my fucking problem, bro. It's not. I fucking have this shit. I'm giving it to you for free. And the reason why I keep saying this is because I don't want anybody to skip any of this. Why? Because it's all important. I fucking put this all together so that way you guys can understand the concepts. You may think you understand a fair value gap, but if I come to you in person and I ask you a fuck ton of questions, how is a fair value gap? What's the prominent fair value gap? Why the fuck does a fair value gap work over the fucking, what time does a fair value gap work at? Where's fair value work in, right? You won't be able to tell me that. And if you are able to tell me that, then you're not watching these fucking videos. You don't need them. Right? This is what I'm telling you. Don't fucking, it's a process. It's gonna be here. It's a process. You're gonna fucking fail. You're gonna win. You're gonna fail. You're gonna win until you start fucking winning over and over and over and over and over again. That's it. That was the fucking lesson for today, boys. Liquidity. We have that shit. We're going over it more. I'm giving a whole section to liquidity. And then I'm having a whole section to time, and then we're going to get into a lot of fucking shit, right? I appreciate you motherfuckers for coming out. Follow me on everything if you haven't. Fucking subscribe to the fucking channel. Fucking appreciate you guys. If you guys are fucking doing this with me, put it in the comments, right? If you guys have been here since day one, put it in the fucking comments. Like, hey, been here since day one. This shit's awesome. Appreciate you, bro. Starting to actually get it. Or, hey, man, could you explain this better? Fucking, I got you. You understand? I'll go over it again. Appreciate you motherfuckers for coming out, right? That's what I'm saying. Appreciate you guys. For real, for real. This is all spent to your time and fucking effort, right? Give yourself a fucking round of applause, bro. You really fucking, you made it through the fucking video. You took your fucking notes. You did good today, right? You worked, you did the shit you were supposed to do. Maybe to some of the fucking people that probably didn't do that much, but you still took the fucking notes. You still watched the whole video. That's a fucking start. At least you're doing something, bro. Now, strive to be 1% better. Now, next tomorrow, just fucking do an hour of back testing. 1% better. 30 minutes of back testing. 1% better, right? You got to actually want it. And then when you start seeing the results, be okay with those $300 wins, $200 wins, because they're more than what you make right now. Let's be real here. $300 in one day is more than what you make at your job right now, right? That's a fucking fact. And in an hour at that. In 2 hours, $300 in 2 hours, in an hour is way, you don't make that right now. 90% of people don't make that right now. That's a fucking fact. And if they do, they're doing better for themselves and they're doing decent, right? The average person isn't doing that. The average person isn't making $300 in 2 fucking hours, bro. It's not, right? You're a special person. You're either an entrepreneur, selling something, or doing something else, right? You're not going to make that from a job at all, right? Probably working for yourself, a job working for yourself, like a fucking construction job or whatever the fuck. But at that point, you gotta find that every fucking day. You gotta find that's not gonna happen every day. You can make $200-$300 at least starting off every single fucking day. Be okay with that. Be okay with a $50 win, a $100 win, right? Because you don't need to make a fucking $1,000. You do probably need it, but you don't fucking need it right now. And if this is what you're getting into to fucking to make whatever money that you need to make on the quick side, then I'm telling you, you're gonna fail, bro. Because that's the mindset that is gonna kill you. Because you need to detach yourself from that number. You need to detach yourself from the fucking minus 10,000 plus 10,000 USD. You understand? Because that is the way the game works, right? That's the way it is. And if I'm just being real here, you should most likely just learn a skill, do the shit that you need to do. Why? Because it helps you in life, right? Don't go going from side hustle to side hustle, drop shipping to wholesaling to fucking wholesaling real estate to fucking fixing flips when you don't even have the fucking money to do it in the first place. But fucking, like, bro, be real with yourself here, bro. You're fucking jumping from side hustle to side hustle, thinking that you're gonna fucking do something in one of these. Think you're gonna make $10,000 in one fucking month, in your first month, 2 months, because you're special and you're you and you're smart and you're fucking, you do things a smart way, in a millennial way, or in a fucking Gen Z way, or you think you're smarter than other people. Bro, I'm telling you to think, bro, you're gonna lose. I'm telling you, you're gonna lose. And when you lose, come back to the video. I'll help you, bro. I'm being real. If you're not gonna accept the fact that you're gonna lose by having that mindset, come back, leave the video, come back when you fucking lose, because then you're gonna realize, shit, bro, he was fucking right. He fucking was right. Straight up. You cannot come in this fucking bitch. You'll probably make a little bit of money. Don't get me wrong. You could get lucky. You could make money, right? But you will lose that money. If you are risking that money, you don't know how to keep that money. You don't know what it takes to keep that money. You don't know what it takes to make it again and again, and the day after that, and the day after that, or how to say no to money like that, how to say no to the market and be like, yeah, you know what? It's not giving me what I want to see right now. So I'm gonna just hop off for today. I'm good. I'm up fucking like 10. It's defense. You understand? If you can't watch these, bro, and you can't watch them all the way through, bro, have fun fucking doing nothing with your life, bro.